Hey everyone, welcome back to G2's weekly market update, where we break down the top global market stories and what they mean for investors like you. Let's dive right in. Starting with the United States. It was a holiday shortened but eventful week on Wall Street. Major indexes ended higher, led by tech names and small caps, though late week jitters capped gains. The spotlight was on the August jobs report, which showed just 22,000 jobs added, the weakest hiring pace since 2020. Unemployment ticked up to 4.3% and job openings fell to their lowest since 2024. For the first time since 2021, the number of unemployed Americans now exceeds job openings. Markets took this as a sign the labor market is cooling fast. Fueling bets on the Fed rate cut in September, futures are now pricing a 100% chance of at least a 25 basis point cut, with odds of a 50 basis point cut rising. Treasury yields sank, with the 10-year hitting its lowest since April. On the sector front, the Nasdaq climbed 1.1%, boosted by Apple and Alphabet after an antitrust ruling was viewed as less severe than expected. The S&P 500 added 0.3%, while the Dow slipped 0.3%. Meanwhile, the economic data stayed mixed. The ISM manufacturing PMI remained in contraction for a sixth straight month at 48.7. But services activity surprised on the upside, climbing to 52, signaling expansion. Over to Europe. The STOXX 600 slipped slightly, down 0.2% as weak US data and a stronger euro weighed on sentiment. Inflation ticked up to 2.1% in August, keeping close to the ECB's target, while core inflation held steady at 2.3%. Services inflation cooled a touch but remains elevated. ECB officials largely reinforced expectations that rates will stay on hold for now, with most economists believing the easing cycle has ended. In the UK, housing markets showed signs of stabilizing. Mortgage approvals rose, but price indicators were mixed. Meanwhile, Bank of England Governor Andrew Bailey struck a cautious tone, warning there is considerably more doubt about further rate cuts, citing sticky inflation risks. Now to Japan. Japanese equities advanced, with the Nikkei up 0.7% and the Topix gaining nearly 1%, helped by a newly implemented US-Japan trade deal that reduces tariffs on Japanese autos in exchange for major investment in the US. On the policy side, speculation about Bank of Japan rate hike is building. Wage growth surged 4.1% year on year in July, while real wages turned positive for the first time this year, strengthening the case for a hike as early as October. Bond yields eased slightly, with the 10-year JGB at 1.57%, though still near multi-decade highs. Political uncertainty also weighed as Prime Minister Ishiba faced renewed pressure to step down. The yen weakened slightly to around 148 per dollar. And finally, China. After a strong August rally, Chinese equities cooled. The CSI 300 slipped 0.8%, while the Shanghai Composite lost 1.2%. Hong Kong's Hang Seng, however, gained 1.3%. The pullback came as investors took profits following the CSI 300's 10% surge in August, its best month in nearly a year. Trading volumes and margin financing remain at record highs, signaling retail investors are driving much of the momentum. Sentiment is still buoyed by optimism around AI innovation and Beijing's push to curb excess competition, but economic fundamentals lag behind. Growth remains pressured by weak property markets, persistent deflation risks, and the ongoing US China tariff dispute. Economists expect new stimulus measures soon to prevent further slowdown. G2 takeaway. This week underscored the delicate balance between policy, growth, and sentiment. In the US, a softening labor market has markets convinced the Fed will cut in September. In Europe, inflation remains sticky enough to keep the ECB cautious. Japan's wage gains are putting the Bank of Japan closer to hiking rates. And in China, markets are rallying on liquidity and retail flows, not fundamentals. For investors, the message is clear. Policy moves are driving markets more than the data itself, so staying nimble is key. That is your G2 weekly market update. If you found this helpful, do not forget to like, share, and follow us for more insights. And tell us in the comments, do you think the Fed will go for a 25 or 50 basis point cut in September? Thanks for watching, and we'll see you next week.